Hello, my dear student. How are you all? Everyone fine. Today, I am here to discuss RTP for CA Final Financial Reporting paper for May 2024 attempt. In this RTP, this time they have given two case study based questions. In each case study, they have 5 MCQs. This total 10 MCQs has been given. Now, as per ICAI information, they will ask you 30 marks MCQ based question. Means from examination point of view, it is quite possible they will give you 3 case study having 15 MCQs. Means each case study will have 5 MCQs and each MCQ will carry 2 marks. Why 2 marks? Means with the correct solution you need to give also reasoning of your solution. Means if you are not providing reasoning for each MCQ solution, then you will not get any marks. So be careful for MCQ based question. You need to write down the reason of your answer whatever you have chosen. Understood this point? So from my point of view, from examination purpose, they will give you how many case study? 3 case study. Each case study might have 5 questions carrying 2 marks. This total MCQs will be 15 into 230 marks question. For all MCQ, you need to write down the reason of your solution also. Understood? Done. Now let us have a discussion. First, this time RTP have which question from which chapter? Correct. The first two case study, you can see case scenario 1. So case scenario 1 is from India 16. Similar question we have done in India 16. Correct now. But this question I will discuss because now they have asked from MCQ's point of view. So this is related to India 16. Same to same question we have in our question bank, means from ICAI resource only. Correct. Case study number 2, what they have done in case study 2, they have just given 4 small points, which is very simple. You can do it by your own, but they have given four points in that. Out of that 4 point, they have asked 5 MCQs. So of course, this also will do in discussion. Then coming to question 11, question 11 is related to business combination. Business combination in from this chapter they have asked a question related to step acquisition. Same to same question we have done in the class. Same to same question we have in ICAI resource. This is not a new question, does not require any discussion from my point of view. Correct. So of course this question is related to step acquisition, which you can do by your own. You don't require my help for further discussion of this particular question. Correct. Then coming to question number 2, question number 12 related to professional and ethical duty of chartered accountant. I hope you have already completed these classes by way of amendment classes. Correct now. I hope you have done this. So this will be a totally new question from your point of view, and of course this question is not in ICAI study material. So this question will do this question in what this discussion. Okay, sir. So question number 12 is related to professional and ethical duty. This time I am expecting a question from this of 8 marks. 8 marks question can be asked from this chapter. Then coming to India's 12, question 13. This is also a question from ICAI resource from new scheme syllabus. A new question has been introduced in the new scheme syllabus study material, and that question has been given. Means that was illustration number 1 in ICAI study material. That question has been given RTP. So of course we'll have a discussion on this because this is the new question incorporated in ICAI study material now given RTP. So have a chance that this question can come in exam. Understood? Yes, sir. So question 13 is related to what? Is related to RTP. Related to India's 12. Coming to next point. Next question is related to borrowing cost. It is a new question. We'll have a discussion on that. India 16. Simple question, but new question. It is a new question. We can write down this is a totally new question. Understood, but simple. Then coming to India's 10, event occurring after reporting date and India's 109 financial instrument. This is related to impairment loss and India's 10. This we can see it is also a new question. However, a simple question you can do it by rule. Correct now, but we'll have a discussion. All the new questions will have a discussion. Then India's 2 inventory. This is also a simple question, but new question. We'll have a discussion on this. Okay, sir? Yes, sir. Then India's 7 statement of cash flow. This is very simple question. Only one new point is there. Of course, that new point will have a discussion. So we can say new question because one new point has been added. But similar type of question we have done the class. If you have understood that one new point, this is totally a simple question. Chalega? Yes, sir. Then coming to Ind AS 115 revenue from contract with customer. This type of question is given in ICAI resource. Having this question we have in what? Question bank also. So this is not any question, does not require any discussion. This is related to identification of what performance obligation, whether it is a separate or multiple, whether it is a single or multiple performance obligation. Correct now. Ind AS 110 consolidated financial statement. So this time they have given one question based on loss of control. Once again, similar question we have in ICAI resource. Same to same question we have done in the class and we have in our question bank also. So this is not any question. This does not require any further discussion. But yes, it is an important question. Already I have listed as an must revise question before exam, and this question have been given RTP. So high chances this question can come in exam. But it is not any question. Does not require any discussion on this. Correct now. In days 102 share based payment. This is also a new question. I will say it is a new question. Correct now. But simple question related to non-employee share based payment. Correct now. But I will say new question, 5 marks question of this nature may come in exam. Understood? So this was the overview of RTP. Overview of RTP. Understood? So are you ready with all the discussions now? So we'll have a discussion only on those questions which are totally new. Correct now. Of course, discussing that question which you have already done will be wastage of time. Yes, sir. Chalo. So let us first start with case study 1. However, it is not a new question, but then also I will do it. Why? Because this is MCQ based case study. Chalo. So let us start with case study number 1. FA Limited is a company which manufacture aircraft part and engine and sell them to large multinational company like Boeing and Airbus Industries. I think with the first line you have understood this question we have done in the class. Following are the details of some of the transaction entered into by the company. On 1st April 2002, date, circle it, the company began the construction of new production line in its aircraft part manufacturing set. So it means they are developing a production line, new production line. They are doing construction of new production line. Cost relating to production line. So this production line will become property, plant and equipment, and this will be for this India 60 will be applicable. Details. Cost of basic material like lease price 12.5 lakh less 20% trade discount. Thank you very much. This will be capitalized. Recoverable goods and service tax incurred but not included in purchase cost. So recoverable, so it is refundable, therefore it will not be a part of cost price. Employment cost of the construction staff for 3 months. Correct. So we need to first find out what is the construction period. Construction period can be 3 months, it can be more than 3 months, it can be less than 3 months, depending upon the information given the question. Till 30th June 2002 is 1.20. Of course, it will be capitalized, but we need to understand what is our capitalization period. Other overhead directly related to construction, this will be also capitalized. Payment to external advisor relating to construction, this will be also capitalized. Expected dismantling and restoration cost will be capitalized, but at present value we need to find out the discounting factor. Yes sir, chalega. Now the production line took 2 months to be ready for use and was brought into use on 31st May. This is the day of ready for use. It means the capitalization period is only how many months? 2 months. It means, can I say they have given employment cost for how many months? 3 months. So we need to capitalize only for how many months? 2 months. That is 0.80 will be capitalized. 0.80 will be capitalized and 0.40 will not be capitalized. That will be charged to PLS and expense. The other overhead were incurred during 2 month period. Other overhead incurred during 2 month period only. So that overhead was related for 2 months only. For the period ended 31st May 2002. They included an abnormal cost of 0.3 lakh caused by major electrical fault. So there was an abnormal loss. Abnormal loss will not be capitalized, it will be charged to profit and loss account. So out of 0.90, we should deduct 0.30. It means we can capitalize only 0.60. Understood? Yes, sir. The production line is expected to have a useful economic life of 8 years. What is the useful life is 8 years. After 8 years, FA Limited is legally required to dismantle the plant in a specified manner and restore its location to an acceptable standard. So they are legally required. There is a legal obligation for dismantling. Therefore, dismantling cost will be capitalized. The amount of 2 lakh included in the cost estimate is the amount that is expected to incur at the end of useful life of the production line. That is already given above also. The appropriate discount rate is 5% and the present value of rupees 1 payable in 80 at a discount rate of 5% is approximately 0.68. So they have also given what discounting factor. So we will multiply what into 0.68. Chalega? Yes sir. 4 years after being brought into use, the production line will require a measure overall to ensure that it generate economic benefit for the second half of the useful life. So after 4 years, we need to incur some major inspection cost. The estimated cost of overall at current price is 3 lakh, but if that inspection overhauling expenditure is done today, the cost will be 3 lakh. So again, this cost will be included in the total cost, which will give benefit for the first 4 years. So can I say we'll use our component accounting for depreciation. So to the extent the cost related for overhauling will charge depreciation for 4 years, and for balance cost will charge depreciation for how many years? 8 years. No impairment of the plant has occurred by 31st March 2003. Understood? Correct. They have given the second part. One more part has been given in this. Let's see. During the year ended 31st March, the first part is related to India 16. Come to second part. During the year ended 31st March 2003, FA Limited provide consultancy services to a customer regarding the installation of a new production system related to aircraft parts. The system has caused the customer considerable problem, so the customer has taken a legal action against the company for the loss of the profit that has arisen as a result of the problem with the system. The customer has claimed the damages to the tune of 1.6 lakh. Of course, this is related to Ind AS 37 provision, contingent liability and contingent asset. The legal department of FA Limited consider that there is a 25% chance the claim can be successfully defended. Means when I say it is probable that they can't defend the case, means they may lose the case. So there is a present obligation arising from past event. The legal department further stated that they are reasonably confident the company is covered by insurance against this type of losses. The legal department further stated that they are reasonably confident the company is covered. So there is some insurance claim, but can I say insurance claim is reimbursement which has nothing to do with the provision. If the reimbursement is virtually certain, then we need to recognize the separate asset for that. But that does not mean that we will not recognize provision for that. And the provision need to be recognized if all the three conditions given under Ind AS 37 is satisfied. The accountant feel that nothing need to be provided for this claim as the company is suitably covered against any possible losses. This is not correct. Let's see what question they have asked in MCQ. FA Limited has an associate company, Flynet Limited. Following are the information of Flynet Limited for the year ended 31st March 2003. You can see they have given net income after tax means profit after tax, decrease in account receivable, depreciation, increase in inventory, increase in account payable, depreciation in wages payable, tax charge for the year, deferred tax liability and profit from sale of land. So of course, I think this information they have given to find out cash flow from operations. Correct now. So I think this question is related to Ind AS 7. Ind AS 7. Correct. So this question case study number 1 has three parts. One is related to Ind AS 16, then Ind AS 37, then Ind AS 7. Correct. Let us do one by one. On the basis of the fact given above, choose the most appropriate answer to question number 1 to question 5 below based on the relevant Indian accounting standard. Which of the following items need to be capitalized in determining the cost of production line? Abnormal cost, correct now. Which of the following items need to be capitalized? Correct now. Need to be capitalized they have asked. So abnormal cost will not be capitalized. Recoverable GST will not be capitalized. Initial estimate of cost of dismantling and removing the item and restoration cost of 2 lakh will be capitalized but at present value. So this is also not correct. Initial estimate of cost of dismantling and removing the item and restoration of site will be capitalized at 2 lakh multiplied by 0.68. How much it is coming? 2 into, check karo, 2 into 0.68 is equal to 1.36. So this will be correct. Understood? So of course you can give the reason as per India's 37 it will be at what present value, and as per India's 60 it will be capitalized. Chalega? Yes sir. Now calculate a company's associate line in net limited cash flow from operation. Let us calculate. Yes sir. So this is profit after tax 120. In this first we'll add tax charge. So 15 will be added. So this becomes profit before tax. So how much it is coming profit before tax? 120 plus 15 is equal to 135. Then depreciation will be added. Depreciation how much? 25 will be added. Then there is one profit on sale of land too, that will be deducted. That will be deducted. Understood? Yes sir. So this will become operating profit before working capital changes. So this will come how much? 135 plus 25 minus 2 is equal to how much? 158. Then we'll do working capital changes. So you can see they have given decrease in account receivable. So decrease in any operating asset will be what added, correct now? So decrease in account receivable, the 20 will be added. Then increase in inventory 10 will be deducted. Increase in operating asset, then increase in account payable, this is operating liability, increase in account payable, so that 7 will be added. And decrease in wages payable, the decrease in liability will be deducted, so 5 will be deducted. Understood this point? I hope all the points we have done. So this is coming how much? It is 158 plus 20 minus 10 plus 7 minus 5 is equal to how much? 170. So your answer is what? Your correct answer is what? 170. 170 is the correct answer. Understood? Let me check the answer also. Yeah. So correct answer is what? You can see 170 is the correct answer. You can see they have given reason also. Reason also given same. They have what? In the same way they have prepared. So you need to write down this. Then only you will get marks. Otherwise you will not get marks. Okay, sir? Yes, sir. Chalo. Now coming to the next point. What they have given. Next question is what? What accounting treatments should be done in FA Limited books for the year ended 31st March 2003 as the customer has taken legal action against the company on the loss of profit that has arisen as a result of problem with the system. Nothing need to be provided. This is not at all correct because of course provisions should be created. A provision for of rupees 1.6 lakhs to be recognized with a corresponding charge to PL. So this seems to be correct, but they have not given anything about insurance claim. So you need to wait for the best answer correct now. So point number B may be one option which may be correct. Provision of 0.4 lakh as per the best possible outcome should be recognized with a corresponding charge to pay. This is not at all correct because we cannot create a provision with a net amount. Understood now? Net amount means provision minus reimbursement asset. That is not allowed. Contingent liability would be disclosed in the 31st March 2003 financial statement. Charge to PL, if any, would be recognized in the period when the claim is settled. This is also not correct because the question is silent about insurance claim receivable. Why? Because it was not virtually certain. Correct? As per the information given in the question, so they have not given any option for that particular point. The best option become point number B. So point number B become correct. Understood? Yes, sir. Chalega. Next point. Compute the total amount to be charged to statement of PL with respect to production line for the year ended 31st March 2003 and the balance of provision for dismantling costs carried at balance sheet. So they have asked 2 point how much will be charged to PL. So of course how much will be charged to PL based on production line. So that will be depreciation cost and one will be interest cost on provision for dismantling. And they have also asked you to calculate a carrying amount of provision for dismantling. So first let us calculate a carrying amount of provision for dismantling. So can I say it is 1.36? You have capitalized. In this you will add interest at a rate of 5% for how many months? So from 31st May. From 31st May it is because that is the date when the asset is ready for you. So your capitalization will be, so you will create provision on that date. So for the first year the capitalization interest will be capitalized. Interest will be added. Capitalized means will add it in the provision. So interest will be added to the provision for how many months? 10 months. So 10 by 12. Understood? To 1.36 multiplied by this how much? It is coming 1.36 into 5% into 10 divided by 12. It is coming 0.566. So we can say 0.56. It is coming how much? Plus 1.36. It is coming 1.41. या 42 कर सकते हैं 1.42 correct 1.42. So can you see the best option is this 1.42? So of course this is only correct, means you can be smart enough to identify which one is correct, but reasoning is required. So you can't say only this because reason need to be given for this also, how you have calculated this. For that first you need to find out what. First you need to find out cost. So let us find out the cost first. What is the cost of production line? The cost will be what? 10 plus what? 0.80, then 0.60, then 0.50, then 1.36 will be capitalized. This is coming how much? Check karo. 10 plus 0.8, 10 plus 0.8, 0.6, 0.5, 1.36. It's coming 13.26. Now out of that, okay, 3 lakh is for what? The overall expenditure, current current inspection cost or overall expenses given. Correct. Now so that have a economic benefit for the first 4 year, so we'll use component accounting for depreciation and balance become 10.26. On these three we'll charge depreciation for how many year? 4 year. For how many month? 10 by 12. Understood? This is coming how much? 3 into 3 divided by 4 into 10 divided by 12 is coming 0.625. And for 10.26 into 1 by 8 into 10 by 12, depreciation will be for 10 month only. So it is 10.26 divided by 8 into 10 divided by 12 is equal to how much? Is 1.06875. Total become how much? Plus 0.625. ये कितना आया? 1.69375. And we have one finance means interest cost. Interest cost how much we calculated? We calculated interest cost, that is 0.56. You can say 0.56, correct. Now or you can say 0.57 also. So 0.56 add कर दो 0.56 और 7 कर दो 57. So this is coming how much? 1.69 plus 0.57 is equal to 2.26. Thing is wrong. So, 1 minute. I think this is 1.36 into 5% into 10 divided by 12 is coming, sorry, this was 0.057. आपको गलती हुआ. So it is 1.36 plus 0.057. It is coming 1.42. 1.42 this you got. So 0.057. It was 0.057. So can you do it? 0.057. Now how much it is coming? 1.69 plus 0.057 is equal to how much? 1.74. 1.747. So 1.747. What is the answer? Is 1.747 means approximately 1.76. So this become your correct answer. Understood? The approximation answer. Understood? So some rounding off they have done, means I think they have taken 0.06. If you take 0.06, then your answer will match. Understood? Yes, sir. Okay, sir. Done. Yes, sir. Yes, sir. Then point of 5 is what? Compute the cost of production line to be capitalized. This already we calculate, that is 13.26. So 13.26 is the answer. So this become what? Point number 5 guys. This is what case study number 1. I hope you have understood this. Now let us come to case study number 2. Can we start? So what they have given? HS Limited is a car manufacturing company. During the year HS Limited has entered into many transaction details of which are given below. Okay, they are given some transaction about HS Limited. Let us read one by one. With the intention to expand, HS Limited has entered into a share purchase agreement with the shareholders of FM Limited to purchase 30% stake in FM Limited as on 1st June 2002 at a price of 30 per share. So they have purchased how much? 30%. Of course, 30% will not give control, it will give significant influence. As per terms of SPA, HS Limited has an option to purchase an additional 25% stake in FM Limited on or before 15 June 2002 at a price of 30 per share. So they have a call option to purchase additional equity share, means they have some potential voting right. So the, can I say, for control definition for control definition as per Ind AS 110, an investor has a control if they have a power over investing. Now, power over investee means what? They have an existing right which gives current ability to direct the relevant activities of the investee. The current for determining the current ability, the potential voting right will be also considered if they are substantive. If they are substantive means if they are in the money. In the money means what? They are favorable. Understood? Now, similarly, the selling shareholder has an option to sell an additional 25% stake in FM Limited on or before 15 June 2002 to HSL Limited at a price of 30 per share. At a price of 30 per share. Means, can I say the selling shareholder has an put option also. It means it is substantive because that will be always exercised. That will be always exercised. Understood? So can I, this potential voting right is now substantive. Understood? Yes, sir. The decision on the relevant activities of FM Limited were made in the annual general meeting or extraordinary general meeting. A resolution of AGM or EGM is passed when more than 50% vote are cast in favor of resolution. You can see they have what? 30% and they can additional acquire 25% which will result in total 55%, but right now they have 30%. But before meeting, if they can exercise their call option, understood. It means they have a current ability to take all the decision regarding relevant activities in the upcoming annual general meeting or EGM. It means it will give power over investee. Understood? Yes, sir. An AGM or EGM can be called by giving at least 21 days advance notice. 21 days, and you can see it can be exercised before 21 days. You can see 1st June 2002 they have acquired, and on 15 June 2002 they can exercise their right on or before 15 June 2002. It means before 21 days, it gives current ability to direct the relevant activities of the investee, and therefore investor has power over investee which will give what? Control over investee, and therefore can I say Ind AS 110 will be applicable provided there are two more conditions which is satisfied. Correct? Now we need to understand what is the MCQ question behind this. During the year, HS Limited issued compulsory convertible debenture on a private placement of rupees 100 lakh. Each CCD is convertible into 5 shares at the end of 4 years from the date of issue, and the annual interest payable is at a rate of 6% per annum. This is what contractual rate of interest. At initial recognition, HSL Limited recognized the liability component of compound financial instrument, that is 20 lakh 79,009,063. Means out of 100 lakh 20 lakh 79,063 is what liability component, that is already given. We are not supposed to calculate it. So find out equity component. It is how much? 20,79,063 is equal to 79,20,937. This become equity component. HS Limited also incurred expense of 2 lakh in connection with the issue of instrument. This become transaction cost. Nature of the expense include fees paid to the legal advisor, registration and regulatory fees. Means this is nothing but transaction cost. Now, as per Ind AS 32, transaction cost will be allocated in case of compound financial instrument in the ratio of fair value of equity and liability component. So this 2 lakh will be allocated to both equity and liability component of the compound financial instrument in this ratio. In this ratio, allocation you can do. Chalega. We don't know. We need to read what MC question they have asked. HSL Limited acquired a 40% stake in NM Limited as on 1st Jan 2002 for rupees 8 lakh. The 40% will give rise to significant influence and classify the investment in NM Limited as an associate. Means Ind AS 28 will be applicable. As on 1st Jan 2002, the carrying amount and the fair value of plant and equipment of NM Limited is 3 lakh and 5 lakh respectively, with the remaining useful life of 5 years. So of course, this 5 lakh fair value will be considered. So you can see there is a fair value gain of 2 lakh. On this 2 lakh, can I say additional depreciation will charge for post acquisition period? For post acquisition period. So 2 lakh divided by 20 means it become 10,000. 10,000 का 40% will be additional depreciation for equity accounting, equity method accounting. चलेगा. Now from 1st Jan 2002 to 31st March 2002, NM Limited generate a profit of 50,000. The 50,000 into 40%, this will be also allocated to the investor as a share in profit from associate. चलेगा. Okay. Let me see what question they have asked in MCQ. While selling a car, HSL Limited provided trade discount of 1% sale price, which is mentioned on the invoice. HSL Limited provided credit period of 7 days to its customer. However, it paid upfront, then HSL give an additional cash discount of 2%. HSL also provided a voucher worth rupees 500 with a validity of 1 year, which can be used at an apparel store. Means a voucher has been given. A voucher, whenever a cash voucher is given, this is nothing but consideration payable to the customer. Now, as per India's 115, any consideration payable to customer, which can be in the form of voucher or cash discount or whatever. Correct now. Any incentive or any voucher given to the customer, which is nothing but consideration payable to customer, will be deducted from transaction price. Will be deducted from transaction price to determine the transaction price. Understood? Yes, sir. Now let's see what are the question they have asked. Point number 6. At what amount HSL shall carry investment in NM Limited in consolidated financial statement? What is the cost price? Batao. Cost price is 8 lakh. Correct. What is the share in profit? 50,000. 50,000 into 40%, how much? That is 20,000 will be added. And what is the additional depreciation? That is 10,000. 10,000 into 40% means 4,000. 4,000 will be deducted. So this become how much? 8 lakh 16,000. This is the answer. 8 lakh 16,000 is the answer. The 8 lakh 16,000 will be the answer. Simple. Very simple. Let us come to the next point. How should HSL account for trade discount, cash discount and voucher given to customer on sale of car? So trade discount, cash discount will be deducted from transaction price. Correct now. So to find out transaction price, we should always deduct trade discount and cash discount. Correct now. Now the cash discount will be given only when it is paid immediately. So if paid immediately, so that will be deducted. If not paid immediately, so we need to wait for the actual settlement. Understood? Means it will be estimated. Means it will be considered as variable consideration. It will be considered as variable consideration. Understood now? But they have said that if paid immediately, correct now, cash discount will be given. So if it is paid immediately, because of, and if it is paid immediately, cash discount will be always deducted. And voucher given to customer on sale of car, so that voucher, the cash amount whatever the payable to customer will be also deducted from transaction price. Let's see what the option has been given. Trade discount shall be reduced from revenue, however cash discount and the value of voucher shall be charged expense. This is not correct. Trade discount and cash discount both shall be reduced. This is also not correct. Trade discount, cash discount and value of voucher shall be charged and expense. This is also not correct. Trade discount, cash discount, value of voucher shall be reduced from revenue. This is correct. Point number, option number D is correct. Okay, sir. The reason you can read. What shall be the accounting treatment of directly attributable expense of 2 lakh incurred in connection with the issue of compulsory convertible debenture? That 2 lakh will be allocated to equity and liability component in the ratio of their fair value. In the ratio of their fair value. So what is given? Means of course this point number C is correct. A proportion of this shall be reduced from equity and the balance 41,581, which is based on the fair value of liability component, shall be recognized as an interest cost, because that is deducted from liability component. It will be recognized as an interest cost by using effective interest method over the period of 4 years by using the effective interest method. Option number C is correct. Reason you can read. Point number 9. With more acquisition at the end of year, HSL has investment in 2 subsidiaries, 3 associate and 1 joint venture. Which of the following statement is correct in relation to the accounting of this investment in separate financial statement? In separate financial statement, correct. HSL Limited is required to measure all such investment at cost. This is not correct, because Ind AS 27 has given option of cost of fair value as per Ind AS 109. HSL Limited has an option to account for the investment in associate and joint venture using equity method. This is also not correct because in separate financial statement we don't apply equity method. HSL Limited has an option for each investment to measure either at cost or in accordance with Ind AS 101. This seems to be correct, but let's read D. D might be more correct. HSL Limited has an option to measure all such investment either at cost or in accordance with Ind AS 109. The option is available for each category of investment separately, that is subsidiaries, associate and joint venture. This is more correct because this option cost or fair value that is available category wise. Category wise means for all the subsidiary they can either adopt cost or fair value. For all the associate they can either adopt cost or fair value. Understood? Yes, sir. So option number D is more correct. Last question. With respect to SPA entered by HSL, determine the date when HSL gained control over FM Limited. So date of acquisition will date when they have acquired 30% only, because on that day, on that date, on 1st June 2002, they have also have one potential voting right, which can be exercised before meeting will be held. Means can I say they have a potential voting right which is substantive. Substantive means it is the money. So of course they have a power over investee. Power over investee with two more condition is given: exposure right to variable return and an ability to use the power. If all these three conditions satisfied, it means they have a control over investee. So the date of acquisition will be 1st June 2002. 1st June 2002. That is more correct. Yes, sir. The reason you can read, but 1st June 2002 is the correct answer. Got this point? With this, today we have done two case study. Case study 1, case study 2. I hope you have understood the entire discussion. The other new question, whatever is given the RTP, will come out with one more video. Understood? I hope you have understood the case study based question, and you have understood how to react whenever a case study based question is asked. Correct? Understood? This video will really, I think, will help you. Subscribe my channel for more updates about the upcoming video. And if you have liked the video, share this video with your friends so that this video will help them for preparing for the